it also means is that we can expect, I think, a good deal of inflation, which should do very well for all commodities and will probably do well for stocks and cryptos too. Probably will. But in terms of measuring it in ounces of gold, my belief is that all of these things will fall in terms of its relation to an ounce of gold. And the rest of the world is done taking our treasuries. The appetite for our treasuries is completely and totally gone. And maybe you bring in a Judy Shelton to one of the Fed governor positions who has enough pull to actually introduce legislation to do the 30-year treasury redeemable in gold, as she speaks of, to give some form of incentive to hold our debt, where you have to be out of your mind to buy a 10-year treasury right now. To me, it's uninvestable.
In today's news recap, higher supplies to the UK lift Swiss October gold exports. Gold exports from Switzerland rose in October compared to September due to higher supplies to Britain, but were down from a year ago as high gold prices kept deliveries to China and Hong Kong subdued. Swiss customs data showed on Tuesday. Supplies from Switzerland, the world's biggest bullion refining and transit hub, to Britain in October reached the highest level since June 2021, according to the data. London is the world's largest center for over-the-counter trading of gold. This year's 27% gold price rally, which took spot prices to a record high of $2,790.15 per troy ounce on October 31, has been affecting physical demand in China, the world's top consumer of the metal. However, gold exports from Switzerland to India, the world's second largest gold consumer and a major importer, rose in October from September amid festival purchases. Before we jump back into the clips, check out our exclusive Black Friday VPN deal. A good VPN is essential for keeping your data private and secure. And with this deal, you're getting top-tier protection for just a few bucks. It's fast, reliable, and a no-brainer at this price. Plus, you'll get 3 extra months free and a 30-day money-back guarantee. Check the link in the pinned comment. Don't miss out.
And they use these opportunities where the paper price is smashed down to buy and to take possession and take delivery of. And I think it speaks to the real demand for gold and silver. And we're not even talking physical in retail. We're talking on a much broader basis. The biggest money in the world understands that, I think, that this is a transition period away from things like U.S. treasuries, which again are getting eviscerated as the 10-year goes higher, which has been weaponized, which has risen by 500 basis points in a year, which is succumbing to inflation. And because of the weaponization and because of this inflation and ultimately, I guess it's a long shot, but you could even say default risk. And what we did with Russian treasuries is default. I mean, call it what you want, call it sanctioning, it's stealing. We defaulted. And we used it to fund the Ukrainian war. And these are things, they're doing the same thing in the European Union. These are very provocative moves. And so the rest of the world is saying, I don't want to hold treasuries anymore, and I'll buy commodities with it. But they're very shrewd in the way that they do it. They don't buy it the way most people think they should. Just buy it all. Well, then the whole thing blows apart. Instead, they're doing it far more methodical, far more diabolical. They're playing the long game, and every time we're stupid enough to knock it down, they're there with dollars that are losing value and treasuries which are rolling off their balance sheet and using the proceeds to buy things like gold and silver, and boom, it comes right back up again. So it's not going to be straight line, but what we see with Trump is something we should be excited about. We should be happy that they're going to address all of the things that they are addressing, but it doesn't change the fact that one way or the other, whether it's orderly, where Trump were to do all of these things, bring back manufacturing, in order to do that, in order to do the things that he's talking about, we don't have a manufacturing base. We don't have the facilities or the machinery. You'd have to build all that. That takes time. You'd have to train people. All of the things that he wants to do to become more of a protectionist country, if you will, America first. Well, that could send us into a Great Depression. Or maybe it's far worse than that, and he presides over some form of a reset. Any way you look at it to get to the other side, and I'm optimistic. I really am. I'm optimistic for the future of the country, more so than I have been for the last 4 years. But that doesn't mean that we don't have to go through some event, whether it be orderly, which probably not, or somewhat chaotic, whether it be a depression or a hyperinflation or a combination of the both, where it's hyperstagflation, where the Great Depression 2.0 meets the printing press. One way or the other, you have to pay your bar tab. And I think that's coming, and I think the world understands that, and they'll choose inflation over the very, very difficult decisions unless they're willing to slash military, slash Social Security, slash Medicare, slash pensions, slash military or veteran benefits. They're not going to do that. And if that be the case, then it will only increase the amount of debt that is accumulating day by day by day to the tune of $3 billion a day increase. And even slashing all of the waste, the interest just on the accumulated debt is moving at such a pace that it will overwhelm by 2031 everything. It will be the largest line item across the board, only allowing them to make Medicare and Social Security payments, and everything else, all discretional items will have to be borrowed. And of course, that probably means higher taxes as well. So there will be pain to deal with. What that looks like, I don't know. And we'll get through to the other side. But what it also means is that we can expect, I think, a good deal of inflation, which should do very well for all commodities, and will probably do well for stocks and cryptos too. Probably will. But in terms of measuring it in ounces of gold, my belief is that all of these things will fall in terms of its relation to an ounce of gold. And the rest of the world is done taking our treasuries. The appetite for our treasuries is completely and totally gone. And maybe you bring in a Judy Shelton to one of the Fed governor positions who has enough pull to actually introduce legislation to do the 30-year treasury redeemable in gold, as she speaks of, to give some form of incentive to hold our debt, where you have to be out of your mind to buy a 10-year treasury right now. To me, it's uninvestable. Inflation being so much higher and there's so much risk in holding it, at some point, these kinds of things will need to be addressed. And when you have the level of indebtedness, we have the needing at least 10 trillion a year to finance debt that's rolling over and new debt. Who's going to buy all of those treasuries? Does it mean that ultimately it's the Federal Reserve, which is monetization, which creates hyperinflation? I mean, any way you cut it, we have to go through that period of darkness, of pain, of paying our bar tab. And I think there's no one better to administer that than Trump. But to think that the reasoning for holding commodities just vanished is a big mistake. And that's what the traders used to clean up a bunch of their short positions that were really butchering their balance sheet.
In today's news recap, India's gold market update: festive buying holds ground in the face of high prices. Gold extended its record-breaking streak into October. Momentum softens post-U.S. elections. Gold continued its rally in October for the fourth consecutive month, hitting multiple fresh highs and closing the month with a gain of almost 5% at $2,779 per ounce. The price rise was driven by event risk and uncertainty surrounding the U.S. elections, along with escalating geopolitical tensions, which outweighed the higher opportunity cost for gold on account of a stronger U.S. dollar and higher bond yields. The rally in gold paused post the U.S. election as the dollar strengthened and Treasury yields rose. In fact, both international and domestic gold prices have fallen by 8% since the end of October. Despite this recent pullback, gold remains one of the best performing assets this year, with a YTD return of 17% in Indian rupee terms at the time of publication. Gold in the domestic market has been trading at a slight discount to its international counterpart since mid-August, reflecting a balanced demand-supply dynamic. Following the sharp import duty cut in July, the flow of smuggled gold into the country has almost ceased, making way for official imports. Despite record high prices, consumer buying during Diwali was strong in both gold jewelry and bars and coins. Markets and media reported higher footfall at jewelry stores and robust buying of coins via online as well as offline platforms. Promotional events and marketing campaigns undertaken by jewelers to lift sales. Indian gold ETFs continued to attract strong inflows in October, fueled by a favorable gold price momentum and increased volatility in domestic stock markets. The long-term capital gains treatment for gold, which was announced in July, has provided a continued boost, as reflected in the significant rise in inflows since that time. Now, we'll show you more clips, but first, check out our exclusive Black Friday VPN deal. VPNs are an essential way to keep your data private and secure, and with this massive discount, it'll cost just a few bucks. It's a no-brainer. Plus, you'll get 3 extra months free and a 30-day money-back guarantee. Check the link in the pinned comment. Don't miss it.
Big meeting in Kazan where I talked about how the BIS, in essence, enacted espionage against the BRICS countries. It's right out of a James Bond movie, as far as I'm concerned, threatening to pull the plug on Enbridge at the 12th hour, saying that they couldn't be part of anything that the BRICS are trying to do with Enbridge because they wouldn't be part of a country that is, or be part of a program where countries involved are being sanctioned by the West. It's as if they forgot that Russia was the R in BRICS. And after 3-4 years of developing Enbridge with UAE, China, Hong Kong, and Thailand, that all of a sudden at the 12th hour, when it's operational, they come and say, no, we can't do this. Russia's being sanctioned. Really? Well, where the hell have you been for the last 4 years? That was a big deal. Another big deal to me was a comment that came out of Japan. And so you had one of their principal foreign advisors who said that he said that America first mantra that Trump will bring out will mean that he'll have little interest in the U.S. Japan or even the U.S. South Korea relationship. Now, I can't say that that's true, but this is what he said. And he said, as a result, Japan will have to conduct its own foreign policy. And I found it interesting where he talked about a skillful way to manage the power balance with China, Russia, and North Korea. And he said this should be a golden opportunity for Japan. We can take back the initiative and become a truly independent country. He's the one who said, and by the way, he expressed frustration that 85% of their skies are, in effect, America's skies, where the U.S. military bases account for a substantial acreage in their land, and that since World War II, they've controlled the majority of all the airspace over Japan. He says it's ridiculous. It's interesting when you hear Japan mention BRICS countries. Jim Willey has talked about the fact that maybe Japan would join the BRICS when it's every country for themselves at a certain point. I also think it's notable to mention that they had talked about developing the BRICS metals exchange, which is something that is purely logical to me. I think they will. I think after the Western exchanges are exposed for what they are, a system that allows massive rehypothecation, massive naked shorting by Western bullion banks who control the price and have for a long time. And now these countries are using that leverage, using that stupidity against us by standing for delivery slowly and methodically, not too fast to, the game will end. So they do it enough to where they are literally bleeding the coffers dry. And that will continue. And then when these exchanges or the Western exchanges, the COMEX and the LBMA, are viewed as fugazi, I guess you could say, you will see the rise of the Dubai exchange, the Moscow exchange, the Shanghai exchange, and perhaps even a BRICS exchange. These countries are shedding their desire to hold dollars, but more importantly, treasuries. And that was part of the petro deal. That's what's financed our lifestyle. That's what finances our debt spending, is the purchase of these treasuries, which are no longer really of any appetite for these countries. Instead, they're buying commodities like gold, like base metals, like silver, like anything that is tangible. Like I often point to China buying the London Metals Exchange. That's not by coincidence. They want commodities, they want tangibles, and it's a better place to put it than our treasuries, which have all of these issues. So another thing that we continue to see is rhetoric about the relationship between China and India on the mend, that the border issue is supposedly behind them. I think it's very important for them to show the world that they have stability. And at the same time, we now see joint naval exercises on tap for Iran and Saudi Arabia. This is Sunni and Shiite. They've hated each other. Remember, China brokered a peace deal last year between the two after the U.S. has never been able to do that. China comes in and does that. So again, what we are seeing, I think, is a concentrated effort to continue to do more of the same, accumulate commodities, build infrastructure, their BRICS pay, their BRICS clear, their BRICS bridge, all of this stuff, I think will only be crystallized by what the BIS did. And what the BIS did is one of the worst things I've ever seen. And then you get a State Department spokesman who says any challenging of an alternative system, rather, any attempt to bring in an alternative system that threatens the dollar's reserve role or the SWIFT system is a threat to global democracy. I mean, I think that's pretty rich. That's a lot of hubris. And I think the BRICS countries, after seeing what the BIS did, the Bank of International Settlements, which is a Western institution, really very underhanded, I think it will only crystallize their resolve. The presidency moves to Brazil this year, and they've talked about Brazil's role will be to integrate the countries that have expressed interest, about 59 of them. So we'll see. I think it's important to understand that this is something that is moving. And maybe it will move faster as a result of this. I don't know. But here again, bringing Trump in with, again, threatening countries with sanctions if they abandon the dollar, imposing tariffs. These are all things that will just incentivize and crystallize the resolve these countries have. And looking at trusting the Western institutions like the BIS, once you break that kind of trust, who knows where things go. But I think a lot of people have a hard time dealing with the fact that this is monotonous, that this takes a long time, that it's not instantly gratifying. But I think it is moving in that direction, and you can see it if you look closely. They're trying to show the world they have their act together, that they're favoring peace and unity over aggression and coercion, that they favor commodities over treasuries and local currencies and trading over US dollars. This is all a trend in motion and hasn't slowed down just because President Trump, fortunately, will take office in January.
What are your thoughts on Andy Schectman's interview? Do you agree with his predictions? Do you think the BRICS nations could challenge the US dollar and disrupt the American economy? Could gold really blow up in 2025? Drop your honest opinions in the comments and let the stacker community know if you're investing in miners or prefer sticking with physical metals. Thanks for watching. Don't forget to check out this video over here. I'm sure you'll enjoy it. I'll see you on the other side.